G'day traders, Stacey Burke from Stacey Burke Trading, and today is Monday, September 19th, 2016. Just reviewing the British pound and just going to highlight a couple of things. And before I do, just going to mention again, these aren't forecasts or trading after the fact. These are demonstrating a couple of really simple principles that show up every day over and over again. They're going to show up tomorrow, they're going to show up the rest of this week, and they're going to continue to show up. And what you do if that information is up to you. I'm just trying to point out some very simple strategies that come back over and over again that potentially may work for you. So as you're aware, I've made mention, I've received some other feedback saying trading after the fact. All I'm demonstrating is a simple approach that can enable you to position yourself potentially on the side of big moves just by being patient, applying the specific time of day and why, and also just using basic support and resistance. So let's go ahead and just review what's happened last week. So Friday, Thursday, Wednesday, Tuesday, and Monday. And again, just reviewing Monday's trade, as I always do every day, I will put in the most recent highs and lows from the previous day's session. Okay, now in the red boxes that I have highlighted there, that is the 3 hours between 2 a.m. and 5 a.m. of the London Open. Now, one of the things I don't, very rarely do I trade Monday, but I'm going to just point out a couple of things that one of the reasons why is that often what I find, if you go to an end-of-day chart, you'll find that Monday can often be a range sort of bound day or doji type day. There often can be moves on a Monday. I just basically have decided that I like to let Monday trade out first and have that time to myself. So Monday's traded, we come back on Tuesday, and my rule of thumb is immediately I will put on the levels. Now, if I wait for 5 a.m. New York, what I will often do is in that second hour around the 4 a.m., which is 4 p.m. Perth time, I will come in and start to see if there's been a recent high or low since the day has traded from Asia. So in this particular case, we would mark off the most recent high and low once London started trading. And once the third hour, that 2 a.m. to 5 a.m. candle has printed, so I'm not taking any trades any time before that, and I'll demonstrate why here. I used to look at trying to trade the open, but I found that was hit and miss, and it was often hard. I was using 5-minute time frames, and it was very inconsistent. I found it hard to be consistent day in and day out. But what I have found is that if you go out to the longer time frames, you'll start to see that, going back to our hypothesis, that 80% of the time within that first 3 hours of London and Europe trading, often a high or low for the session will be established. It doesn't necessarily mean for the 24-hour market, but at least until the New York session starts to trade. So once that started to trade, as you can see, that 5 a.m. candle right there. Okay. So what's happened prior to that is that we've had a breakout, and now we have a level that can either be limit ordered from, but we also have a level below and a level above. But also, if we have a high and low established, we have a couple of options now to manage our risk. And we can also see where we have at least a 2-to-1, maybe 3-to-1 range, depending on how that market follows through. Now, if you were going long, you can see where you're going to run into resistance. So, Wednesday morning, we do our same process. We look to put a high and low. Now, in this particular case, because the market traded and we had a pullback into the low of the session and the open of Asia, these would be my two levels. Now again, you can see that we have the 2 a.m., 2 to 3, 3 to 4, and 4 to 5 a.m. candles trading. So we potentially have a high here, and as the market has broken out down here, traders that were aggressive and entering the market in line with this original engulfment pattern may have taken a trade up somewhere in here. Other traders may have decided to enter the market somewhere as it approached the low. Now this is somewhat of a squeeze play, but obviously again, at any point when you go to new highs or new lows, you need to be going to break even, because that is the highest point of vulnerability for the market to reverse or continue. So again, I'm highlighting two things: support and resistance, and time of day. So again, the next day we go into London. We have a low prior to that setting up. Once London has opened up and trades into the 5 a.m. candle, we now also have a high that we can highlight into that range. We see a pullback on the 4 a.m. candle, but it's all within inside of this range, so I wouldn't consider that a low yet. And once the US session has been trading over here, that would be a low, but at this point I would have gone to bed. So for me, on this particular day, the only point I think you could have entered that trade was on the swing bear candle. Your stop would have had to have gone at least at the 9 o'clock candle high, so chances are you may have been stopped out or possibly run very close to your stop, depending on where you placed it. And then also on the follow through, you would have gone to break even at the breach of that low, and most likely got stopped out at break even. If you'd stayed in that trade and your stop was somewhere up here, depending on how tight you held it, if your stop was up here, you may have been in that trade a bit longer. Now again, Friday starts to trade. So we put our high and low in place. Are we seeing a pattern here, traders? There's no forecasting, there's no guesswork. Very simple. We wait for the 5 a.m. candle, so you can see that London breakout is breakout, pullback. So at any point inside of this range, traders could have comfortably shorted this market, kept their risk controlled at the high of London, and somewhere into this squeeze into the US session, position themselves to go to break even after it broke through to new lows. The market weekly pulled back and continued to fall for the rest of the US session. So just to emphasize, waiting until that 2 a.m. to 5 a.m. session has traded and London has clearly established a direction, using the most recent previous support and resistance. When you go to new highs or new lows, once you're in a trade, going to break even. And it's that simple, traders. From that point, you can either establish a 2 to 1, a 3 to 1 target, or you can trail that to other levels on the chart if you scroll back far enough. There's no secret here. Contrary to some of the commenters' beliefs on my other channel, that's something that you can do tomorrow. You can do it this afternoon. It's that simple. Now, is it going to work out every single time? Probably not. But that's why you're always going to have a stop in place. You're going to manage the downside. And as you can see, most of the risk you should ever take on is no greater than 1R for the instrument you're trading on the time frame that you're trading. So hopefully you got some value from this today, traders. Big thing, be patient. Wait for London range to open up and establish itself. And even going into the US session, make sure you take a look at what London's done. Look for a breakout or a directional bias, and then position yourself with the least amount of risk and the maximum amount of gain. Stay disciplined, traders. Keep it simple, and may the markets go with you. Have a great day.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets. And this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined and may the markets go with you.